All right, good morning, everybody. It's Monday, January 24th, 2022. We're going to finish out this month, hopefully, really nice and hopefully nice and red, huh? Um, let's take a look here. I want to jump up to my ultra high time frames, and since it's Monday, I want to take a look at kind of the higher time frames and look at the bigger picture. So just to quickly jump up, our annual candles here, as you can see, we were looking at 50% of last year at 4208, and it looks like we're basically right back there now. I mean, that's what a basically a 600 point correction here in a matter of what two weeks now, or just a couple days. So we'll see what happens. This is really, I don't have much to say on this chart other than the fact that we are essentially back down to a 50% retracement of all of last year's price action. So let's go up to our 3-month chart. And this is where it's kind of interesting because we do have indications of exhaustion from this really zoomed out perspective. However, the divergences, which is what I look for on my RVI here, do not indicate any signs of exhaustion. So what this is kind of telling me from, again, from this zoomed out perspective, it's kind of telling me we still have higher to go, but there obviously there's room for some type of correction. Now, if we look at this quarterly chart, or this is each candle here is 3 months, and we go back and we look at the last 10, 11, 12 years of price action, you can see that every once in a while we have a red bar, and it's typically just one. I see one instance here from about 10 years ago where we did have two red bars and then the bulls jumped back in. And so just looking at that pattern alone, well, maybe it's two red, maybe three red at the most, and then we get the recovery. So right now we've got our first red bar here on the quarterly chart in a long time, right? So we've have, let's see here, 1, 2, 3, 4, 5, 6, 7 bars to the upside before we got our first red bar here, which seems to be about the pattern here. 1, 2, 3, 4, 5, 6, 7, 8. And then you start getting the problem there. And back here, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. And then so we're due for this type of kind of correction in the market. And keep in mind that it's healthy for the market to have some type of in-breath, right? So we've got a lot of these really strong out-breaths in the market, get this huge push, and then we need to breathe back in, right, and get some more steam, and then go ahead and blow out again. So right now it looks like the market is taking a little bit of an in-breath from this zoomed out perspective, and just looking at the previous bar, our previous 3-month bar, 50% of that was 44.93. And then the bar before that, 50% was 43.17. And as you can see, price is continually pushing lower. We're about to break 50% of that previous candle from 2 candles before now, right? So things are starting to look bearish from the higher perspective, but we need to keep in mind the overall context in this kind of market. The bulls continually jump back in. And so even though we do have a pretty large red bar, in fact, if we continue to sell off on this 3-month perspective, we'll have a bearish engulfing bar pretty soon here if we can break below the lows there at 42.52. Now in my trade community here on the Discord, on the DT Lab server, last night I mentioned that if we can stay above the low of this previous 3-month bar, 42.52, we will actually have a bullish divergence on all of our high time frame charts. So I'm going to dial down and show you what I'm seeing there. And then by the end here, we'll get down to the short time frames and see if we have some actionable trades for this morning and some interesting levels to watch. One final thing to mention, and I think I have this fib. Yeah, I have the fib on some of the other time frames here. If we step back and look all the way back to that COVID correction back from March of 2020, I believe it started in February of 2020, got the pullback, and then eventually got that really strong push back up. If we draw a fib from the lows of the COVID correction all the way up to our all-time high, we're not even at even a 25% correction of that leg, right? So still plenty of room below us for the market to pull back to and find support and still not be out of the weeds for that larger bullish kind of context that we're in. So let's go down to the monthly now. And this is where I want to bring up the potential bullish pattern that could form, again, if we don't break the low of this 42.52 low that was made back, looks like in October of 2021. So as you can see from this RVI perspective, we have pushed lower on RVI, but price is still technically higher in comparison. So again, I'm watching that. This doesn't mean I'm buying the market because there might be a divergence on this very zoomed out perspective. It just means I'm keeping that in mind. And if we do end up finding some really strong bullish cooperation here, somewhere around 42.52 or higher, or maybe we come down and test that area and never really break below it, and then start getting that larger push out, I will then know I have all of these higher time frames kind of below me, supporting that move. So we have to kind of wait for that follow through from the bulls to start to get kind of conviction from these higher time frame signals. But if they do start to jump in, this is something I will be aware of, right? Same thing on the weekly. Again, that same swing low from 42.52 back here. If we look, price is still really hasn't come down to break those lows, but the RVI sure is much lower. So we're seeing the same picture on the weekly and then again on the daily. So the daily again from that 42.52 low, still from the RVI perspective down here, much lower. But you know, price is obviously a little bit higher. So I'm watching that. Doesn't mean again I'm buying the market, but from the larger perspective here, keeping that in mind, 42.52 will be important. And then from the obvious, you know, things that we're seeing here on the chart, it obviously looks very, very bearish, right? So the expectation for lower is pretty much there right now. And we're just kind of watching this to see if we do start to get support that could follow through for an entire push all the way back to new all-time highs. And if we do push through the all-time highs and jump up a little higher here, we do have the fib leg from the COVID correction, which would bring us to a 27% extension all the way up at around 5,500. So again, would not be surprising to see the bulls jump in, even if they end up breaking 42.52 and we get some larger correction all the way down. I mean, at that point, we're looking at something closer to, you know, what, a 10-20% correction at that point. But we could break lower and still find support and be up at 5,500 in the next few weeks, right? It's always a possibility. So looking from these higher time frames, we see the potential for that bullish signal, again, off of 42.52. But overall, it's obviously a very bearish market. We really don't want to be buyers until we see that bullish momentum start to jump in. So let's take a look at our 4-hour and see if it's telling us much of anything this morning. And to be perfectly honest with you, I don't see much here. Again, as we break lower, when we look to our divergences, we keep getting bullish signals and we get follow through. Sometimes we get follow through of about 40, 50, 60 points, sometimes 70 points to the upside, but then the bears jump in, we get a bearish divergence, and they continue to break lower. So we still see that right now. We still see the potential bullish signal from the lows of Friday. We get some type of follow through of about 30, 40 points to the upside in our overnight Globex session, but then we get another bearish signal, and sure enough, the bears continue to bring us to lower lows. So I don't think that there's really, from a divergence perspective on the shorter time frames, that's going to help us orient ourselves for the potential move this morning. And looking at the 60-minute here, just kind of interesting to note that we came down right into 43.61 in the overnight session, essentially bounced right off of it to the tick. Actually, the low there, was 61.25 to the tick. We tried to get follow through again, another bullish signal on these kind of upper time frames, but no follow through, and we're down right into our 43.2450 area. Now, in one of the things that I put out, one of the notes I put out in my community yesterday was we're looking at potentially 24.50 and 42.62. If we get all the way down to 42.62, we're looking at what, just about, let's see, that's just about a 550 point correction in a market that made all-time highs around 4,800. So that will just be just about a 10% correction of the market down in this area. So pretty healthy correction at that point. And then we do have, again, our eye level sitting there and some really good support and resistance in the market at that level. So another potential for the market to find some support in that area, just like they have off of a lot of these other eye levels on this descent lower. In fact, it's been almost a stair-step type pattern, not only off the lows, but selling off the back end of a lot of these eye levels to the downside. So that would be one of my first targets this morning. If the bears continue to sell off, which again is somewhat of the expectation here, 42.62 would be that next level down that I'd be looking at. And then I'd like to consider the previous daily range and look at what we have below us. And yeah, that's 100% extension of that leg from Friday's price action would bring us right into 42.80. So potential for a hold around there. And I think that's pretty much it. I mean, if some mornings we come in and there's just a preponderance of a signal that tells us a direction. This morning, we're just stuck in an extreme downtrend. So the idea is to be sellers until the point that we start to see some really strong bullish momentum. And one of the first levels we're going to want to see break, what we're going to want to see price break above is 43.81, the low of Friday, before there's really any type of faith in buying the market. And then even from there, we still have a whole lot of levels of contention above that before I really have any strong faith in an actual bullish reversal. Of course, as traders, we're reacting to the market. We don't know what's going to happen next. So if we start to get some strong bullish momentum and they start to really rip, of course, it wouldn't be a bad idea to go ahead and find a low risk entry off of one of our eye levels with a good signal and go ahead and jump in the market long. But the idea here is I think we have more downside to play, and there's always the possibility that the bulls do start ripping, and if they do, we'll then have that monthly, quarterly, weekly, daily, everything pointing to back to the upside. That kind of covers the larger picture, and since we do have a lot of time this morning, what I want to look at are some of the more interesting levels that we have close by. So in my trade room, every morning we're looking at specific levels in the market where we expect there to be some type of reaction, whether it's a 2-point bounce or it's a 30 or a 50-point bounce off the level. I don't really care, right? Because all we're doing is managing these trades, and if the levels don't work, we're getting out at a very small amount of risk. But the upside is, anywhere from 5 to 10 to 1 based on the risk to reward that we take. So a lot of these levels we're trying because they work so often. So above us, if the bulls really start to rip, and you can see right now, we've got just about a 20-point push off of the overnight low right now. Don't really have a nice bullish divergence there on this 10-minute chart, but we do have a nice 10, 20, 30-point follow through from the overnight low. If the bulls start to really push out of here, there are 3 basic levels that we're looking at, general areas where it would make sense for the bears to jump in and give the bulls a little bit of contention, and that would be up here right around 43.50, where you can see we have one of our eye levels and a prediction point, a KP, sitting there. A little bit further up, if the bulls jump through there, we do have that 43.61 area, which is also another prediction point and our major eye level sitting there. That also was a really strong area of support in the overnight session. So if anyone here is familiar with how I trade, I do like looking at these major wicks on the 10-minute chart. A lot of times you'll see the market will use those as strong support or resistance depending on which direction the market is coming into them. In fact, right now we have this swing low here at 43.3450, and I wouldn't be too surprised if the market did get some type of hiccup right off of that swing low there. But I'm looking at that 43.34 and the other swing low there just around 43.54 as also potential areas. Remember, we don't know what's going to happen. All we can do is map out the areas that make the most sense for there to be interaction in the market. And so these two would be kind of intermediate levels in between some of these major levels I just highlighted. And then, of course, the previous daily low up there at 43.81 quarter. As I said in the pre-market session, if price can break through there and get above, that would be our first little clue that there is going to be some potential bullish reversal here in the market. But remember, we're not out of the weeds. That would just be kind of our first check mark. We got a couple more check marks we're going to need before there's a lot more faith in that reversal. But that would be my first clue there. The next clue would be a break through that orange line and through that magenta line. So a lot of stuff above that could keep the bulls down. And down below us, if they can get through these levels, we'll worry about what we have above us after that happens. To the downside, if the bulls cannot get through some of these levels I just outlined here, it looks like we're going to be pushing lower. And as we push lower, remember I said 42.62 was that major level I'm looking at. We do have some other levels in between, however. So we do have two eye levels sitting here, one around 43.08, another around 42.92, and then we have two prediction points, the 42.82 and the 42.71. So each of these levels is equally as valid as a potential area of support. So remember, if you get short this morning and you get in, let's say you get short off of the back end of 50 or the back end of 55, and they do sell off and break the overnight low, these areas would be areas what I would be interested in taking profit on my short position. So this is kind of what I tell everyone in my trade room almost every day. Of course, there's going to be instances where the rule is not always the same, but typically when we have areas below us where we expect there to be potential support, rather than waiting for the market to come down there and buy the level, I'd be more interested in being short and taking some profit just in front of these levels in case there is a bounce. And then if the market does get some type of stronger bounce off of these levels, and there are some clues for, say, higher in this instance, in this context, then maybe I would look for a long. But I'd rather be short in this type of this context of the market and take profit at these levels rather than trying to catch this as it comes down. Same thing to the upside too. If we're in a strong bullish market, I'm not so sure I want to be selling levels that I expect above me as resistance. I think I'd rather be long, taking profit just in front of them, and then if we get some larger correction or larger bearish move, I can then jump in when it starts to show its hand. So that's what we're looking at this morning. Again, we have these few levels below us, and if the market is going to continue to be really, really bearish here, keep in mind that a lot of these levels, they're just going to go ahead and cut through like a hot knife through butter. They're just going to go right through them. Another thing I'm noticing here from a prediction point perspective, for anyone who's new, anyone who's trying to learn how to use prediction points in your trading, a lot of times when we see prediction points close together, kind of like what we see here with these 3 KPs all within, say, 2 or 3 points of each other, a lot of times that indicates there's going to be some type of congestion in the market in that area. So just keep in mind, if they do come down, they get through 42.62, we still have this little area of potential congestion below that. And if they end up breaking through there, the next prediction point isn't for another 10, 15 points down into that 42.30 area. At that point, it's, we're now looking at breaking above 10% correction in the market. And we're, who knows how far this thing is going to go before we find any type of bullish support. So I think that kind of lays everything out for you guys this morning. Of course, I'm gonna be jumping down to my short time frame chart to be looking for some trades here. Looking to my 512 throughout the overnight market. Once we had the 200 break below the VWAP on our tick chart here, as you can see, it's been a bloodbath holding the 200 on the way down and really have not been back up to test either of those two moving averages. So things are looking real heavy here. And again, it's your guess is as good as mine as to when the bulls are actually going to jump in here to attempt to push higher. Again, nobody really knows for sure, right? So all we can do is react to what the market's doing and use our trading system to have very low risk trade entries, which could potentially follow through for some really big moves. So I think that's where I'll leave it for this morning. I hope that that helped you guys orient yourselves in the market coming into the open. And we're going to jump over to our member section now. Start, like I said, looking for some potential trade setups coming into the open. So have a great rest of your day, guys. And I believe we'll be back here in the DT Lab Traders Room on Thursday morning to do another kind of pre-market. On Mondays, what I like to do is spend a little bit more time looking at those higher time frames. So remember, when we started back here looking at the yearly and the 3-month candles and stuff, this stuff was really just to kind of give us a larger context and orientation in the market. And as I said, from the higher time frame, everything was pointing to some type of correction off of the all-time highs up here. But as we pull back, there is what looks to be the potential for that bullish divergence if we can again hold 42.52 or at least come down, even if we break it but hold and come back up. That's the idea there with that potential bullish signal. So have a great one, guys. We'll see you here on Thursday for another edition of our pre-market. Take care.